Let's also talk about some of the other names. We can maybe look at some names within the plastics category. A lot of plastic names are doing well today. Let's look at Moltech Technologies. Let's also look at Texmo Pipes, Supreme Industries. These are the names that are still hovering up and about. Sugar space, remember, the year end is coming up and you have the sugar space also in a sweet spot. Balrampur Chini, Dalmia Bharat. These are the names that are hovering high. And we now have our guest with us. Nilesh Jain is now joined in on the program. Hi Nilesh, warm welcome to you and thank you so much for taking the time out for this conversation. Nilesh, I want to begin by understanding from you first up your view on the markets, and of course then we'll be getting back to the queries from our viewers as well. How are you looking at the markets currently? What do you think is standing out for you here?
Very good afternoon, Sakshi. Well, today we did see a gap down opening tracking the weak global cues. Looking at the overall setup in the global market, which is indicating a kind of a mixed setup in the Indian equity market as well. If you see, on Friday we have seen a very good momentum, but today that momentum got fizzled out. But the overall structure still looks strong. And if Nifty manages to close about 26,000, where the probability of closing about 26,000 is very high today, then we can expect a move towards 26,100 to 26,200 on the upside. And the Bank Nifty, which is also trading in a positive territory for the day, and it has defended 59,000 level in last few trading sessions now. So Bank Nifty looks strong, and we can expect a move towards 60,000 very soon. So structure-wise, buying decline should be the strategy in the Bank Nifty, keeping a stop loss below 59,000. If at all you get any dip, that can be used as a buying opportunity. But overall, a very good setup for the stock specific market. On index fund, we believe that this kind of a consolidation is likely to continue, but the bias remains on the positive side.
Okay, got that. Let me actually now look at welcoming all our viewers who are joining in on the program to ask their questions on the show as well. We have a lot of viewers who are already with us. We have Chandra Singh with us, Umang Sheth, Sri Lakshmi Narayan. We also have Satyanarayan Rao. We have Shubham Malik joining in. Welcome to all of you who are joining in on the program with all your questions. Tanmay is with us. We have Nancy with us as well. Vinu is with us. Aarti Jain, Kamlesh Narkere. Welcome to all of you. So let's kickstart. There are a lot of queries already pouring in, Nilesh. And of course, we'll come back to asking your own choice of stocks as well. But the first one is from Aarti. She says, I want to make fresh investment in GMR Airport and in BHEL as well. So two stocks from different sectors completely. Any advice here? Maybe for 1 month is her viewpoint. So trading perspective, GMR Airport, BHEL. Where do you find better trading risk reward?
See, both the stocks have a very good setup, specifically GMR Airport, where we have seen a very strong move coming in with a good price and volume attraction on Friday. Today we are getting a follow-up more on the upside. So overall setup for GMR Airport looks strong. On the upside, 110, 115 kind of levels one can keep an eye on from a short-term trading perspective. We're keeping a stop loss below 100. If at all you get any dip, that can be used as a buying opportunity. The structure appears strong for GMR Airport. Now coming to BHEL, here the breakout is awaited. If at all it takes out 290 level on the upside, then will be considered as a short-term consolidation breakout. But overall setup at current level as well looks on a positive side. So can be added at present market price, keeping a stop loss below 275, and on the upside, a short-term trading perspective, we can expect a move towards 295 to 300. So these are the levels on the upside. Both the stocks appear on a positive side.
Okay, got that. Let's take the next one. This one is from one of our viewers, Shomalia Biswas from Kolkata. He wants to know a view on Nifty from you. He says, I have 8 lots of Nifty for 23rd December expiry, 26,100 call option at 95.5. Should I hold it for BTST or not? Is what his question is, Nilesh.
See, 26,100 call, I think the expiry is of 17 December, that's tomorrow. If bought it tomorrow's expiry, then I don't see that kind of spurt coming in on immediate basis, because the structure, as mentioned at the start of the market commentary, I believe the consolidation is likely to continue. But yes, if bought it for next weekly expiry point of view, then there are high possibility of index moving closer towards 26,100, 26,150 in the coming few trading sessions. But yes, keep a strict stop loss in the underlying. If Nifty slips below 25,950, then I would suggest to exit from the long position, because the time decay will work against your call option, and the premiums will erode. That's why it is important to keep a strict stop loss. And as of now, since there is lack of movement in the market, so we can expect the time decay to continue. So advisable to keep a trailing stop loss at the underlying, that is placed at 25,950. If at all you get any spurt in the underlying towards 2650 and 26,100, use that pullback to exit from the long position.
Okay, got that. Let me also look at some of the other questions coming in. We have Vinita Gupta asking the next question. She wants to know from you on the auto space, particularly Nilesh ji. She says, I want to know any near-term targets that you could suggest on Jamna Auto and on Motherson Sumi. Any suggestion on both these as far as near-term targets are concerned? Jamna Auto currently at 126, 1.3% higher in trade, holding up positive. We also have Motherson Sumi, or now it's called Samvardhan Motherson, and she wants to know what exactly would be the outlook on this one as well, currently trading at 119.
Well, both the stocks are looking good on the chart, have a similar setup. Jamna Auto, in fact, this particular counter is looking strong for 130, 135 from a short to medium term perspective, and this momentum is likely to continue. Keeping a trailing stop loss at 121, one can stay put in Jamna Auto, and buy and decline can be the strategy that can be deployed because the structure in Jamna Auto looks strong. Now coming to Motherson, as mentioned, it has a similar structure. This particular counter has given recently gave a very good breakout from the levels of 112, 113. That's a multi-year breakout that we have seen. So Motherson, we are also bullish for 126 to 130 target from a short to medium term perspective, keeping a trailing stop loss at 114. One can go long on declines, and if at all already bought in, then stay put is the advice, but keep a trailing stop loss. The structure from a short to medium term perspective looks positive.
Okay, got that. Taking the next question then, we have this question from one of our viewers. Okay, Sheetal Agarwal. She says, hi Sakshi, I need a view on EPL. My own purchase price for this stock has been 241, and I also have another stock. This is Jindal Saw, which I bought at 255. And she wants to know, since she is on losses, what exactly should she be doing? EPL Limited currently at 218, purchase price was 241. Jindal Saw, the purchase price was 255.
Right, Sakshi. So first of all, I would like to start with Jindal Saw. The stock is constantly witnessing a lower top and lower bottom formation. It's in a downturn. If you pull up the chart of last 1 year, you can clearly see since October 2024, after making high near about 375, it has started, continuous declining trend, and the structure appears weak. But yes, since it has gone into extremely volatile territory, there could be possibility of a pullback move. But the purchase price is quite higher. That price will take a lot of time to come. So if holding period is more than 1 year, then stay put is the advice. Keep a trailing stop loss now at 145, and the trading perspective advice would be to exit on decline, exit on pullbacks. Now coming to EPL, this particular counter looks better placed now because we have already seen a correction. Now the trend has reversed, and we have seen a very good momentum in last 3 to 5 sessions. So this pullback momentum is likely to continue towards 225 to 230 on immediate basis. Now here the stop loss comes around 209, so that should be your trailing stop loss, and stay put in EPL as well.
Okay. The next question that we have is on Igrashi Motors. This is Saktani asking, Igrashi Motors, can he look at a fresh entry for 1 month view?
Igrashi Motor, see, from a short-term, medium-term perspective, there is no clear trend because the counter has been trading in a very tight range. On the upside, 800, 750, that's the supply zone, and good part is that it has a very strong support near about 400. So first of all, if you have already bought it, then keep a very tight stop loss at 400. because if it breaks 200 levels, then it may slide further towards 350 to 300 as well. So first of all, keep a tight stop loss at 400, and if at all you get any pullback towards 480 to 500, use that pullback to exit. If bought it purely from a short to medium term trading perspective, then exit on pullback should be the advice.
Okay. Let's take the next question. This one is from one of our viewers on our WhatsApp, Gul from Kerala. She says, Nilesh sir, can I buy ITC hotels for 1 to 2 years, and at what price should I make an entry?
The ITC hotel is a very good counter from a 1 to 2 years time frame. I think at present level as well, you can start accumulating, not to buy at one go, but the ideal strategy should be to accumulate and buy in a staggered manner. So in multiple tranches, you can start accumulating this counter. It has a very strong support at 160, 165 zone. So on multiple tranches, you can enter in this particular counter. I believe from a short-term perspective, there could be possibility of a stock moving towards 185 to 180. That could be a good entry point in terms of making a fresh entry.
Okay. Let's take the next question. This one is from Murali Krishna. He's from Hyderabad, and he says, I have actually purchased 100 shares of Trent at 4,569, but it's now trading at 4,042. I want to know, should I continue to hold on for long term or should I quit? Now, this is a very interesting question. A lot of people who bet big time on Trent in the year 2024, where it turned out to be the best Nifty stock, the only Nifty stock that doubled investors' money. This entire year has actually been, a slow-moving one for the counter, and therefore absolutely low or no returns for Trent for this year. In the last 1 year, in fact, we have seen the stock drop by about 42%. Any suggestion? What should one do?
Absolutely, Sakshi, you rightly pointed out, we have seen a very strong momentum for a couple of years till 2024, but soon after that, in last 1 year, we have seen a sharp decline that has continued, and overall structure has turned on a negative side. So from a short to medium term perspective, the structure still appears weak, and pullbacks are likely to get sold into. On the lower side, the next support comes somewhere around 3,700. But if bought it from a long-term perspective, then I think one can stay put, because the stock has already corrected close to 42 to 45% in last 1 year. There are high possibility of a pullback move towards 4,500 to 4,800. So one can wait for that pullback from a longer term perspective, but keep a trading stop loss at 3,700 now, and yes, one can stay put if bought it purely from a next 1 year plus kind of time frame.
Okay, got that. Let's take the next one then. We have this question coming in from one of our viewers, Mohit. He's from Ludhiana, and he says, I have 1,000 shares of SBI at 184. My time horizon is 5 years. Can you please guide me what exactly should I be doing? So believing on the largest PSU bank that we have in the country, and for the next 5 years, bought at 184. Look at the price now. It is 966. So Mohit, I believe you've actually got a very early entry into SBI. You were already sitting on multi-bagger returns on this stock, and you further want to stay invested for the next 5 years as well. Well, no harm, I think. Nilesh, what would you say?
Absolutely, Sakshi. So first of all, congratulations to him, because there are very few people, who stay invested for a longer term time frame in this kind of a quality stock. So I still believe there is further room on the upside for stock to move, and if somebody is looking to make an investment from a next 4 to 5 year perspective, I think in terms of making a fresh entry, buy and decline should be the strategy. Already bought it at a very low price, then definitely you should stay put for the upside target of close to 1,500 to 1,700. So that kind of target quite possible in next 2 to 3 year kind of time frame. 5 years is a very long term time frame, but keeping in mind that this particular counter is one of the index heavyweight and a very quality PSU bank. So stay put is the advice, but keep a trailing stop loss in order to protect your principal as well as your return on investment. So keep a trailing stop loss now that comes somewhere around 900 rupees. So that should be the stop loss, and right, this momentum looks very strong on the chart.
Okay, got that. I hope this has truly helped you out. Let's take the next question. This one is from Kaushik Rana. He says, hi, Sakshi, good afternoon. I have PFC shares in my portfolio at 442. I want a long-term view on this one. What would you advise?
See, the longer term time frame as well, if you see PFC, RNC, both stocks are from a quality, pack. But from a short to medium term perspective, there is still some more room left on the lower side because the structure has been in a downtrend for both the stocks. Specifically, PFC looks like it is heading towards 330, 320 on immediate basis. But yes, if somebody has a time frame of next 1-2 years, then I believe there could be possibility of a gradual up move to continue going forward. We have already seen a decent correction. There could be possibility of a rebound going forward. So stay put is the advice for upside levels of 420, 450 kind of levels on the upside can be seen in next 1.5 year. Keep a trailing stop loss now that comes somewhere around 310 and one can stay put for a longer term time frame.
Okay, fair point. Let's actually take the next one. This one is from one of our viewers, Tapan from Kolkata. He says, Namaskar Sakshi ji, congratulations for the ENBA awards. This is a fantastic achievement and a testament to your hard work, dedication and outstanding production. Thank you so much, Tapan ji, for writing it such wonderful, appreciative words for all of us at Business Today television team. Yes, we are celebrating, victory of 6 awards at the ENBA Awards 2025 edition for Business Today television, and this would not have been possible without our viewers' constant belief and support as well. And this definitely helps us to raise our bar every day to ensure that with the belief that you start off every day with us by placing your trust in us, we are going to be ensuring that you get the best of market insights and analysis for top market experts like Nilesh himself to help you out finding out what's the right strategy, which are the right stocks that you should be invested in for profitable trades and investments. So thank you so much for your wishes. Your question is on NTPC. He says, there's absolutely no power in NTPC. What should I do? Should I buy, sell or hold? Yes, that you're right about, because the power stocks that were in flavor in the last year have kind of, slipped from that momentum. Let's find out whether there is any uptick in the new year probably for NTPC. What would you say?
Well, Sakshi, first of all, many congratulations for those awards. Now, coming to NTPC, this particular query, see, power stocks has been in a downtrend. All the power counters have been moving on a sluggish note. So NTPC is also looking sideways to weak as of now. But there could be possibility of some bit of a pullback move in this particular counter towards 335 to 340. So that's a very short-term time frame kind of a view as of now. But from a longer-term perspective, I believe this particular counter needs to break 345 level on the upside. Then probably we can expect a short-term bottom in this counter, and then it can move towards 380 to 400 as well. But for that, it needs to break 345 barrier on the upside. At present, one can stay put if bought it from a longer term perspective, keeping a trailing stop loss at 315. 315 is a multi-month support, so that should be the stop loss for the long position, and we can expect some bit of rebound going forward.
Okay, got that. Let's take the next one. This one is from one of our viewers. Okay, Nancy says, congratulations to your entire channel team. Thank you so much, Nancy. She says, I want to know, will the listing of ICICI AMC bring any traction to the Canara Robeco AMC stock or not, and what could be the short-term targets? Well, for both of these, you will not have any charts to study there, Nilesh, but yes, we are awaiting ICICI AMC's listing. Of course, we've been discussing the AMC space at large and seeing that whether such a large IPO that's actually going to be getting converted into a listed space, 10,000 odd crore rupees of an IPO that came in, how will it impact HDFC, AMC and the others that are already listed? What will be the newer dynamics that one should be aware of? Any suggestion on the AMC space?
Well, there will be certainly some bit of impact in the AMC space. So within that space, if you look at HDFC AMC, UTI AMC, these are the couple of stocks that are better placed as of now. So one can look for HDFC AMC. It's from a very strong brand value, and it has also taken very good support at long-term 200 moving average, which is placed at 2500. So From a positional perspective, it's a very good portfolio stock that one can look for if at all you get any further declines from here, and we can expect a move towards 2750 to 2800. And ICICI Prudential Life AMC that is coming out with the IPO, the GMP is also somewhere around 10 to 15%. And looking at the anchor book, I believe there could be possibility that we may see a good return coming in that particular counter from a longer term perspective. So that is also looking positive. But yes, with the listed peers, I think HDFC MC is a better option.
Okay, got that. Thank you so much, Nilesh, then for sparing your time for us and being with us on the show. And always appreciate your guidance to all our viewers. Hope you have a great time. We'll see and connect with you yet again on another edition of Daily Call soon.
Thank you so much, Sakshi.
All right, viewers, let's start looking at